So, how does a giant of the skies, a company known for airplanes, completely reinvent itself from the ground up? Well, today we're diving into the incredible story of Capital A and its massive transformation in 2025. And believe me, this wasn't just about tweaking the business, it was a full-on digital reinvention.
Just let that sink in for a second. For a company the size of Capital A year of transformation isn't just some corporate buzzword. No, it's a signal of a massive shift, a real pivot point that basically changed the entire DNA of the business. So, where do you even start with a transformation this big? Well, you have to start with the foundation, right? Before building anything new, Capital A knew it had to hit a complete and total financial reset. And here is the first jaw-dropping result of that reset. By selling off its aviation business, Capital A restored its shareholder equity, the net worth of the company, to a positive RM 937 million. That one single move completely wiped the financial slate clean. It paved the way for absolutely everything that came next.
Okay, so with that financial slate wiped clean, the real work could finally begin, building a powerful new foundation for the future. And the results for the full year? They were seriously impressive. We're talking RM 3.39 billion in revenue. But what's even more important is that the company was solidly profitable, with an EBITDA, which is a key measure of how profitable the actual operations are, of RM 443 million. This wasn't just a recovery on paper. This was a new profitable company in action. But just look at the momentum here. A 16% year-on-year jump in revenue in the final quarter alone. That shows you the company wasn't just stable, it was accelerating and accelerating hard right into the new year. This slide really captures the whole story. The company steered away from a period of real uncertainty and recovery and got onto a brand new highway of disciplined, profitable growth. The storm clouds were gone, and the runway ahead was crystal clear. All right, so with that strong foundation in place, the company fired up 4 brand new engines of growth. These are the distinct businesses that are now powering Capital A's future. First up is ADE. Think of it as the high-tech pit crew for commercial aircraft. They basically took all their deep aviation expertise and spun it out into a high-growth engineering and maintenance company. Pretty smart. And you can see the market is clearly hungry for what they're offering. A 31% jump in revenue year on year in the fourth quarter alone. That just shows how strong the demand is for these specialized services. And their strategy is both smart and super focused. Build on that core maintenance business, expand like crazy across the region, and start climbing the value chain into the more profitable services, like complex engine work. Next up, engine number 2, AirAsia MOVE. This is where the company takes its famous brand and uses it to build a powerful digital travel ecosystem. It's essentially become a high-tech online travel agency, or what we call an OTA. And here's the secret sauce to its success. A massive 55% of its revenue now comes from its business-to-business platform. So what does that mean? It means they're not just selling to us, the travelers. They're providing the tech and services to other businesses in the travel industry, which is a huge, scalable market. So what's the big advantage from MOVE? Well, it's a beautifully efficient model. It's asset light, which means it can scale up really fast without huge investments. That focus on B2B is turbocharging its growth, and it's even outperforming competitors in those high-margin add-ons. The third engine is Teleport, the logistics arm. And this business, wow, it went through an absolutely incredible turnaround story in 2025. Just how incredible was that turnaround? Try a RM 40 million swing year on year. It flipped from a significant loss to solid profitability. Now, that does not happen by accident. That's the result of a complete strategic overhaul. So what was the secret? They shifted to an asset-light platform model. This allowed them to move a staggering 167 million parcels. And they did it so successfully that they actually secured crucial growth capital even before an IPO. And finally, the fourth engine, AirAsia Next. This is where Capital A takes its incredibly powerful brand and turns it into a high-tech revenue stream through licensing and technology. The growth here is, well, it's just explosive, a 540% year-on-year revenue increase. That just goes to show you the immense untapped financial power that was locked inside the brand itself. This new division is basically a dedicated engine for converting things like brand equity, customer loyalty, and new tech like AI into high-margin, easily scalable revenue. I mean, it's the very definition of a modern, smart growth strategy. Now, if you look at all four of those engines together, you start to see a common thread running through them. It's the core strategic idea that made this entire transformation possible, what we call the asset-light advantage. So the core shift is actually simple, but it's profound. The old model was asset-heavy aviation, owning tons of expensive planes. The new model is asset-light. It's powered by tech platforms that require way less capital and can scale up much, much faster. It's a simple idea, but it has these huge implications. So what does shifting to an asset-light model actually mean for the company's future growth? Well, what it means is stronger cash flow, because you're not spending billions on physical hardware. It means higher profit margins on your services, and most importantly, it unlocks the potential for that exponential hockey stick kind of growth that defines the world's biggest and most successful tech companies. So all of this, the financial reset, the four new engines, and that asset-light strategy, it really marks the closing of one chapter for Capital A, and the beginning of a very, very different one. So, the final report card for 2025, it's stellar. Positive equity? Check. Profitable core businesses? Check. Scalable growth platforms are all established? Check. And the company is now positioned to exit its financial distress classification, known as PN17. Mission accomplished. And that leaves us with this final, powerful statement. The hard, difficult work of transformation is complete. Now, the singular focus for Capital A is pure, unadulterated growth. What a fascinating story of corporate reinvention.